Good morning. Welcome. This is the live Q&A with local businesses from thrivearundel.com. Welcome. Today is our second day, and we have today some real estate and mortgage professionals, and it looks like we even have a dog on board. So if you're into dogs, we have one of those apparently. Let's see. You guys want to introduce yourselves to the group here?
Sure, I can start. Hi, everyone. I'm Diane Donnelly, and I am with the Donnelly Group of Keller Williams Flagship of Maryland. And I am the president of the sellers division of our team. And being that I'm on the seller side, I strictly work with sellers. I don't work with buyers at all. I have a partner in business, and she will tell you about who she is in just a second.
Hello, everybody. My name is Andrea Loretanegli, and I am with the Donnelly Group of Keller Williams Flagship of Maryland, as Diane mentioned, and we are the dog-friendly realtors. So we're happy to see everybody out there today. I run the buyer side of our business, so 100% of my time is spent working with buyers. So welcome, and David, want to give a shout out?
You know, I saw your mask, and I was thinking of that TV show, The Masked Singer. I thought you might start singing.
She saved us all from that.
Indeed.
My name is David Ratti. I'm with the Ratti lending team at Envoy Mortgage, and we work with people that are looking to purchase homes, refinance homes, and people that are looking to fix up their homes, renovate their homes as well, and help them with the funds to get that taken care of.
Awesome. Well, thank you guys all for being here. For the audience out there, these are all members of our Thrive Arundel business group, and we have a mission not only to support each other with our businesses, but also to give back to the communities in which we live and work. And we're going to kick off today. There's been a lot of discussion about the mortgage industry, how volatile it is right now. So David, why don't you tell us what's happening in mortgages?
Yeah, it's volatile? Well, there is some volatility in the mortgage business. I don't want to get too far in the weeds as far as what's causing the volatility, but I'd like to hit some bullet points just to help people understand some of the challenges that are out there today that didn't exist a month ago. And let's face it, COVID-19 was on nobody's business plan in January. So first of all, we may, due to this virus, we may be looking at increased unemployment. With that increased unemployment, we might see some households not able to make mortgage payments. And that's disruptive to lenders. We may see an increase in forbearance filings, and I'll get more into that later. I'm sure that's going to be a question coming up. And the CARES Act, with all the good that it has done, has placed that financial burden on the lenders. So all of that is really a source of the main sources of volatility in lending.
Yeah.
It's much higher risk.
But rates are still low, right? Why is that?
Rates are still fantastic in certain segments of the market. So the market has lost its appetite for risk. And in those areas, either those programs don't exist or they're costly. But if you are a well-qualified buyer or borrower, interest rates are fantastic.
Awesome. Awesome. And I've seen lots of questions. I know Diane and Andrea are probably hearing a lot of these questions as well on forbearance. So for all the folks out there who are wondering what's up with that, how does that work? Tell us about forbearance.
Sure. It is a really popular topic right now. And I'm not sure anybody listening to me when I'm done, I'm not sure they're really going to like me too much when I'm done explaining this. A lot of people have the perception that forbearance means gift or free. And there's nothing giving or free about forbearance. A forbearance is simply a deferment. It's simply, oh, you're having a tough time. You can't pay your house payment now. You're going to pay it, but we'll give you a little more time. So what that looks like is, let me give you a real life example. Let's say your house payment is $2,000 a month. And let's say we do a 4-month forbearance on that house payment. At the end of that 4-month period, in month 5, you had $2,000 a month, $2,000 a month, $2,000 a month, $2,000 a month. So that's $8,000 plus your 5th month payment. You're at the 5th month, so that $2,000 is due. So when you get out of the forbearance period, you owe $10,000 now. I don't think most people realize that. And I think the reaction is, oh my goodness, I can't pay that. How am I going to pay that? Give me 12 months to pay it. So what that looks like, instead of a $2,000 payment for the next 12 months, you would have a $2,833 house payment. And I think it's really important for consumers and homeowners to keep this in mind, that if they are able to make their house payment, they should make it, because I'm not sure that other situation coming out the back end is going to benefit households. It concerns me.
Yeah. So with so many program changes in the mortgage market, is every bank and lender pretty much offering the same thing and have access to the same products?
Wow, that's a great question. I would say in the past, you may have been able to say that. That generally speaking, most lenders had very similar programs, products, and requirements and guidelines. With the volatility in the financial market, it's almost natural that it would create more inconsistencies than we had seen prior to this. And that's what it has done. So what has changed is that the risk element for lenders has increased quite a bit. And each lender's investors, each risk manager reacts differently to those added risk elements. So for example, it wasn't but a week ago that the minimum credit score for an FHA loan for most lenders was 580. Well, today, that minimum credit score is 640. And for some lenders, it's 660. For other lenders, it is 680 for FHA financing. That's pretty significant inconsistencies and a pretty significant swing in the appetite for risk that the investment community has for these mortgage loans. They're looking for higher quality, more stable borrowers because of the added risk elements. So I hope that helped to answer the question. That's just one piece of it. Right now, it is more important than ever that if you're looking at buying a home or getting home financing, don't try to do this on your own in this environment. You want to get with your loan officer. You want to have somebody who knows what they're doing, who has seen this type of environment before, to help guide you through this.
Awesome. Diane, let's focus on sellers for a minute. COVID's had a big impact on the real estate market. Tell us specifically about sellers and how you're addressing that.
Yep, it has been significant for the sellers. And for the most part, it's based on fear of people coming into the home and infecting the home. Rightfully so. It's a horrific disease. And with that, we have taken a lot of precautions. So the CDC has said, we've heard this over and over, wear gloves. I still see people not wearing gloves. That's mind blowing to me. Wear masks, have sanitizers, wear booties when we're walking in the home. So we have implemented a brand new marketing called the Sanctuary Marketing Plan, which is taking the CDC's recommendation, but it's also allowing us to protect everyone. So as a seller's agent, my job is to protect my sellers. So in doing so, we've implemented a plan where I can meet with you virtually over the computer. I can do all the paperwork, the requisite paperwork to get your house listed over the internet, just like we're doing here. I would have a stager that would walk through the home with you virtually. So you would either have Facebook Live or the what do you call it? Zoom. You could do Zoom and anything virtual, whatever suits your needs. And you can literally just walk them through the home. And the stager will give you tips, paint this room this color, move this piece of furniture over here. So they could do that all virtually. We will do all the photos. And one of the really cool things that we're doing right now is to reduce the number of people that come through your home. We are asking them to watch our 3D immersive virtual tours where they can literally walk through the home. And if they see something, they can zoom closer in on it. They can measure rooms. They can zoom out. They can take a look around. So I'm asking for the buyer's agent, myself, and the buyers to be in a room and watch this virtual tour together so that I can answer questions for them. And if they're interested in the home and they like what they see, we invite them to come out at that time. If there's things that they don't like or they can't live with, then they don't come into the home. So we're reducing the number of people that come in the home, and we're increasing the interest for those people. So in closing, the things that are going on for the sellers is based on fear of infection. So we need to remove that from them the best that we can. So everything that we're doing is to prevent any exposure or limit the amount of exposure for the sellers so that they can feel comfortable.
Awesome. Awesome. I like that 3D immersive tour. That's pretty innovative.
It's very, very cool. People are raving about it. You know, the fact that you can measure rooms through a virtual tour is something that we would never have talked about before. And it's here, it's now, and we've got floor plans. It's a really cool piece of technology that we're embracing.
Awesome. Awesome. What about you, Andrea? You focus mostly on buyers. How has this impacted the buyer market?
I think for the most part, the seller community as a whole have been implementing the CDC regulations. So the buyers have an option. So if they still want to go out and look at homes, I will take them with a lot of precaution. So again, we're wearing booties, gloves, masks, and hand sanitizer. We're calling ahead to make sure if the home is occupied that no one in the home is suffering from any illness before we're even going in there. So making sure it's all clear. Only the decision makers are allowed to go on a showing. So only the people who are buying. Unfortunately, we can't have children or family members come with us. Less is more at this point. And for those that are a little skittish, they have to buy a home. They need to be in, and they don't want to go into an occupied home. We're using the same technology. So we're asking the seller and the listing agent to get on a Zoom call and show the buyer and myself around the house with the Zoom presentation. If it looks like, oh my God, this is a winner, we'll schedule we can actually write a contract unseen, but most buyers don't want to do that. But what we can do is write a contract with a 48-hour contingency that we can go in and physically run through the home.
Yeah.
And at that point, we ask the sellers to vacate, and we're only in there 15 minutes to make sure what we are seeing on the Zoom is in reality what the home looks like.
Yeah.
But buyers are still out there.
Yeah. And so you guys are adapting, just like work from home. You guys are adapting. That's awesome.
Yeah, you know, it's one of those things, Suzanne, and the four of us for sure have been through these kinds of markets before. We've never been through anything like COVID-19. I mean, it's a completely different beast. However, we've been through 9/11. We have been through all different kinds of shifting markets for whatever the reason is. What I can say is the consistency within each of those changing markets is that you have to pivot, pay attention to the market, what's going on, project what's going to happen, and be ready to change your business plan or your business strategy to meet that. And, you know, now is a time to work with somebody who's been through this, who has the confidence to navigate through this, somebody who is who has seen the market shift and has been able to overcome that. You know, I was doing the math earlier this morning for some reason, and I've been in the industry over 30 years, which is shocking to me. So on the real estate, I know, I started when I was 3, in case anybody's doing the math. And so I did some mortgage stuff besides real estate. So then when I got into real estate, we've been doing real estate for about 25 years. But we've seen it, and we've been able to navigate it. And there's lots of great people out there to help you through that. Make sure you're doing your due diligence and finding the right people, because now is not a time for somebody that this is their first run through. This is a tougher market. We've got to be prepared to dig into resources of people who have been through it before. So if I have questions about the mortgage, I'm going to consult people who have been in the mortgage business. Like David is a perfect example. I've talked to David about things going on through the market, finding out why things are happening. But education is the key here, and to get you through this market, work with educated people.
Yeah. Yeah, I don't think that can be stressed enough, because certainly in each of our industries, mortgage, real estate, even marketing, there are tons of people out there who provide the same services we do. But I do think that previous experience with crisis, I remember 9/11, and I remember how crazy it was to even get on the phone to try to call people even a week later.
Yeah.
But you had to figure out a way to make those conversations comfortable. And I think that kind of experience and having been through these crises previously provides each of us unique perspective that we can offer our clients.
Yeah, an example of that is I had a settlement that was going to take place about 2 weeks ago, and an agent called me and said, "Hey, I've got really bad news. My buyer is backing out." And I thought, well, we're going to settlement in about a week. Like, my seller is already packed. What do you mean they're backing out? Did they lose their job? And she said, no, he is just fearful that he will.
Yeah. Yeah.
So what ended up happening was the agent and I talked about 5 different things to talk to the buyer about, to walk him off the ledge, to talk to him, to say, look, there's a lot going on. It is stressful. For those of us who aren't buying a home right now, it's stressful. For those of us who are selling or buying a home, there's added stress to that. So you need to work with all of your individuals that encompass the transaction, and they need to be the calming force. They don't need to add fuel to the fire. They need to walk you through, find answers, find solutions. And we were able to do that.
Mm-hmm.
So I think now is also an environment where agents who have been through this before, and they're seasoned agents, are helping agents who haven't been through it before and don't know the questions to ask and don't know how to help quell some of the fears. But there are solutions, and the key is just to stay calm through them, think through them, reach out to your resources, find answers, take action, implement them, and stay the course.
Yeah. Yeah. And, with all that said, is there anything positive out there? Maybe Andrea or Dave can answer this. Is there anything positive out there for buyers right now?
Yes. We started this year in real estate we were on pace for a record year of all time. This first 2 months of 2020, then bam, this happened. So the inventory was critically lower than it's ever been in previous years. So the buyers out there were really competing. It was 5 offers on a home at some price points, etc. A lot of frustrated buyers out there. So we're still in a seller's market. Don't get me wrong; it hasn't shifted to a buyer's market. The inventory is still low, but there are not as many buyers out there. So when I'm talking to new prospects, I want to make sure that they have to move. We just don't want to be bringing people through people's homes just so they're bored and they want to go look at a house. So
Right.
those people who are serious and have good job security and have to move, there's not as many people fighting for the houses. So that is a positive if we take something away from the environment we're currently in.
Yeah,
Okay.
and I would add to that I always, one of my favorite quotes is opportunity out of adversity. So what's the opportunity here in this adversity? And I agree with Andrea in that there is less competition for the buyers if they have a stable job and for their essential industry. And I don't know if have to buy a house, but are going to buy a house. I don't know that they need to wait. There's probably less competition right now. Yep. And then on the second point with that, on the financing side, mortgage rates are still really historically low for well-qualified buyers, including homeowners that already own a home. Rates are really low if they want to refinance and lower their house payment. So I think there is opportunity across the real estate spectrum that may not be so apparent.
Yep. And along those lines, we know what the rates are now. We don't know what they're going to be 7 months from now.
Good point.
So people who can qualify now may not be able to 6-7 months from now. So you have to take advantage of the situation that we're in.
Yeah, and just to follow up on that, so rates are low. So basically, if you've still got good employment, and things have pretty much stayed status quo for you, it's what we're saying is it's a great time to still buy. There's probably deals out there based on what you're saying, right?
Yep.
But David, can you talk just a minute? There's been a little lot of comments on social media about folks who are not experiencing that in those higher risk categories. Can you just touch on that?
I'll hit some bullet points on that. And what I think you're talking about is the financial markets have lost their appetite for any added risk that is associated with mortgage loans. So there is a sector of the mortgage business that has been significantly impacted by all of this. We call it non-traditional. Within the industry, we call it non-QM. These would be loan products for self-employed people or unusual properties, loans where we verify income by bank statements instead of tax returns. That segment of the industry actually evaporated. It's gone, totally gone. The other segment that's impacted is jumbo financing. So in Anne Arundel County, that's over $520,000. Jumbo financing. There's been some significant shift there as investors, banks, investment houses are hoarding cash, just like you and I are hoarding cash and conserving our reserves. So is the investment community. So on the high balance, the jumbo segment of the market, there's been some shifting there for restricting additional risk factors. So for example, maybe 2 weeks ago, you could refinance your home and get cash back. Well, the cash back option's pretty much been suspended for now because that's an added risk element. But if you want to refinance your home, that's fine. If you want to buy a home, that's fine. So there's been shifts through all of the different segments of the lending process. And again, this is why you really don't want to go this alone in this environment. You want to get with a loan officer to guide you through it.
Okay. Do you think, a couple of comments, questions here. Do you think home prices will rise, fall, or return to normal? So get your crystal ball out. What do you think?
We'd be
Can you
rich
just
if we
answer
did.
yes?
Right. What do you think?
Well, I'm Diane. You can probably speak to this from the people who are not deciding to list right now. So take it away.
Well, if I had a crystal ball, I wouldn't be on this call right now. I'd be hanging out somewhere different.
With a palm tree.
But you're right, and your point is a good one. We don't know what's going to happen. This is all new. We know that we're better poised. Our financial planner, Pablo Alvarado, said that the government is set up much differently now than previously, so we're set up in a much better way. What I anticipate happening, though, is that people who are working out of fear right now, who have decided not to put their house on the market, it's going to be a spring market a little bit later and a lot more intense. So what I anticipate is that we're going to see people who are holding off putting their house on later, along with the people who are going to be spring market sellers. So I think we're going to have an influx as soon as this is over. And with supply and demand, we know that with more people putting their houses on the market, if the buyer demand doesn't come up, we could see some prices fall.
Yeah.
So that's why I wanted to instill upon people, work with what your fears are, see if there's a solution. If there is, now is not a bad time to put your house on the market because the buyers are there and there's people that haven't put their house on the market or put their house on the market and have hit pause and aren't allowing showings. So consider that. But I have a feeling that we're going to see an influx and perhaps prices coming down a little bit. And maybe it will only be for a short term, but if you have a reason to move, it might be a good time to do that.
And if I just may interject something, just as an FYI, there was over 1,000 homes that went under contract in Anne Arundel County in March.
Wow.
So the buyers are out there and the inventory is still low. So for you sellers out there, if you're on the fence, I would do it now.
Yeah.
Because the buyers are out.
They are definitely out. I was doing pre-approval at 9 o'clock last night. They're out.
Mm-hmm.
Yep.
What has been the biggest aha moment for you? You know, personally, professionally, what's been the biggest aha moment for you during this crisis?
Well,
I can take that if you want to go first,
Yeah.
David?
Yep, go for it.
Okay. Mine is probably more of a personal one. I just feel like with all of the changes that have happened as a result of COVID, people slowing down, people being more reflective, people helping people, the outreach has been amazing to sit back and watch. In my industry, it's a 24/7 industry, and I've been doing it for a very long time. I don't have downtime where I'm not thinking about what I need to do. And for the first time in probably 30 years, I'm ashamed to say that, but in the first time in 30 years, I can unplug a little bit without guilt.
Yeah.
And I think a lot of people are. I was driving through the neighborhood yesterday, and there was a sign in the yard in someone right in front of a school, and it said free lunches for those who need it. It's a cooler, and they deliver food at 12 o'clock.
Nice.
That's cool.
Yeah.
So I think if we're able to hold on to some of these things that we did in times of need, if we continue to do that when we don't need it, beautiful.
Yeah.
Good things have come out of adversity.
Yeah. And let's talk a little bit more kind of along that same topic. Thrive Arundel, which is the community that we're all a part of. Thrive has whoops, I think we lost Diane there for a minute. Maybe she'll hop back on. Thrive has initiatives to support our communities. That's one of our core values, is to support the communities in which we live and work. So just talk about, either what you've done as part of Thrive or
There she is.
yeah, she's back. So yeah, just talk a little bit about what you've done to support either local businesses or other people in your community now, either as part of Thrive or other initiatives.
Well, I know, we all know the restaurants are hurting, and some have actually had to close their doors, which is unfortunate. So what we did at Thrive last week is we basically got a local restaurant to make up a bunch of lunches for emergency room workers over at Anne Arundel Medical Center.
That was
and
cool.
they delivered lunch to over 50 employees, and just to say thanks. You guys, they're the heroes out there, the first responders, those people who are helping all those sick people. It's like they're amazing. So it was our way of saying thanks. And the week before that, we also Future Care is a nursing home over here in Arnold, and we delivered pizza for lunch to all the employees over there, and they were just so thankful. Just somebody just saying thank you, and patting them on the back. So it felt good to do that.
Well, and right now, Diane is coordinating the Anne Arundel County Food Bank fundraising drive to help them out as well. So we're actually in the middle of that.
Yeah, and I think we're going to end up sending them a check for about $600. And that's just from our small little group. And we didn't do any outreach for that yet, but we're going to. But just within our small little group, I think we're writing a check for $600, which is wonderful.
Yeah, that's fantastic. What is the most important piece of advice you're giving clients right now? I think we may have touched on this already, but would it be to work with someone that's experienced? Facts, not emotion.
Yeah, I mean, without question, that's number one. If there's a takeaway, number one is don't go through this minefield by yourself.
Yeah. So we have a few comments from the audience. So let me just circle back on a couple of topics. And I don't know if this needs a comment, but a response, but it's a good comment. It says it's important for homeowners to understand how forbearance works. It's not free money. Did you just want to follow up on any of that, David?
I think we covered that earlier, so that might be going back to the beginning of the webinar for the people that have been on it for a while. I don't know that I want to go through all that again, but it is not a gift. You do have to pay it back, and sometimes paying it back is more painful than just getting through it if you're able to. So I'll just leave it at that.
And the other thing too, David, I'm sorry to interrupt. The other thing too is when people are trying to decide, can I make my mortgage payment or I can't, keep your servicer involved. Don't just not make your payments. You have to talk with them about the plan, or you will be considered late. So it's really important to keep them involved as well.
Yeah,
absolutely, very important. There's another thing too that you had talked about what came out of this innovation wise that I didn't want to let slip by. Is one, to follow on what Diane said, I think we've learned work-life balance and working from home. I'm a little concerned what commercial real estate looks like in 2022, in that our entire team across 49 states are just as efficient, maybe even more efficient than we were when everybody went to the office.
Yeah.
So that's number one. Number two is we have implemented e-closing, which is a amazing innovation that allows buyers, in the past, you'd have 10 people sit in a room for an hour signing a bunch of documents. Well, we've implemented e-closing so they can e-sign 90% of their documents. Their settlement now is just a few notary docs with them and a notary, and they're done. So for safety and innovation, those two things, I think for the long term, are going to be changes that will stay. I don't see us going back to old-fashioned 300 pages of paper an hour with 10 people in a room.
Yeah.
That's a good thing.
Yeah. Anything else that you guys have seen really cool and innovative in this process?
Yeah, I said that the strong survive these markets, and there was a hairstylist who said, I can't see you, and I know there's going to be a need out there for people to color their hair. So I picked up on this, but so she said, and it will not be David. He does not have to color his hair. I'll ask about plugs though, David. See if she does that, sends them out.
He needs the skin color.
Yeah, the skin color. That's all right. You're still very cute, David. But what she did was she said, okay, there is a struggle. People aren't allowed to come to see me. I can't work. I have to work to put food on the table. What can I do? So she is mixing the colors and mailing them out to you so that you can do it yourself and you can call her. That's innovation. That is finding solutions to a difficult situation.
Yeah.
Very cool. And I'm seeing that in different arenas all across the board. And it's, I applaud people who fear does paralyzing things. I mean, when we get scared, we could bury our heads or we can dig up and get busy. And, there's some innovation that's just, people should be applauded for thinking outside the box.
Yesterday we had our service, the members of Thrive who are in service industries on the call. And one of my favorites is one of our members, Rick Sharp. He's decided he has an auto repair shop. He needs to keep his guys busy. Nobody really wants to be driving, or nobody can be driving supposedly under the stay-at-home order. So what he's doing is he's making arrangements to come to your house, pick up your car, take it to the shop. He's feeding his guys this way, and then he brings it back. And I had 2 tires replaced this week, and I didn't have to do anything. So I love those ideas.
Fantastic. And there's some companies that I work with right now who are willing to do, if somebody says, Diane, I want to sell the house, but I don't have money to make any repairs. There's a solution for that because people had to find solutions. So now there are some companies that are willing to do the work in advance if you've got the equity in your home and the likelihood of selling is high, who will come out, do the work, and then you pay them at closing. Yeah. So there's solutions for things.
So you're a resource, right? If anybody needs that.
Yeah.
All right. Well, let's wrap it up. What should the audience contact you about, or how do you want to close out the session? So we'll start with Andrea.
Well, I would say, we're essential. We're selling homes and buying homes. So if you want to be in the market, we're here. So contact us. So whatever your scenario, we work out a solution. We're here to help get you to where you want to be. So you can reach out to us. Our website's tdgmoves.com.
Yep. Diane?
Yep. And on mine, now is not a perfect time to sell for everybody. So there are people that have scenarios that I would say, stay put, stay where you are. Let's keep in touch and talk, and we will revisit your situation. If you're curious about whether this is a good time for you to sell right now or not, I just encourage people to call me, have a conversation. We'll talk about the facts, talk about your specific situation. It's not one size fits all. This isn't ideal for everybody. So let's talk about whether this is for you. And again, you can call me at 410-320-6551, or at the website below. You can reach me there as well.
Awesome. David?
And if I can just interject, especially people that might feel they might be getting into trouble, please reach out. We're here to answer your questions and to help you through it.
Yeah. David?
I would say right now, the opportunity is, one, if you're having challenges and have questions related to forbearance, please reach out. My website is below. My phone number is 410-707-5825. The other thing too, we're seeing people take advantage of these really low interest rates, getting pre-approved and going out there and finding opportunities. We can do a pre-approval in 15 minutes. My website's right there. You just go to the website, click it. You can do it from your mobile device. It's really simple. For those looking to refinance, we're seeing a lot of people shifting from 30-year to 15-year mortgages because they're really inexpensive right now. They're saving $80,000, $100,000 in interest expense. So there's opportunities across the board. And I love what Diane said, fact, not fear.
Yeah, and I had one more comment that I just wanted to answer before we close up. The question was, do you think the loss of jobs and or layoffs will prohibit potential buyers from qualifying this summer? Is that a David? I think that David or Diane question.
Well, yeah, I guess I would need a little bit more detail on the question. I think what they're asking is if they were out of work for 3 months because of this, because of COVID-19, and then they go back to work, would a lender look at that as instability? Would they need to be back in the workforce for X amount of time? And historically, lenders do want to see a return to workforce, back in the workforce for 6 months if you've had a large gap in employment. This is not normal. This is an extraordinary circumstance beyond the control of the consumer. So no, I would expect, and we will see that once they return to the workforce and have a pay stub, they will be good to go. That is not an instability issue. This is a world crisis issue that was inflicted upon them. So no, I think that's zero concern.
Okay. All right. Well, I think that wraps us up for today. Thanks to everybody for being here. If you've enjoyed hearing from Diane, Andrea, and David, you can certainly check out their websites, or if you have additional questions, we're all members of Thrive Arundel, so you can check us out on thrivearundel.com and get their contact information there too. Tomorrow, we will be here with a lawyer, an accountant, and a financial planner. And they'll be talking about things like taxes, estate planning, financial planning, the financial markets. And I believe we may even be talking a little bit about some of the programs that are available for businesses. One of our members is getting up to speed on some of those programs. So if you're a business owner, if you have questions related to that, by all means, join us back here tomorrow at 9:30, and we'll see you then. Thanks so much for joining us.
Thanks, everybody.
Thank you.
Stay safe out there. Bye-bye.